Okay, or not good evening, good afternoon, everybody. Let's go ahead and get started. Let me know if you guys can hear my audio and see my screen in the chat box. Just give me a little wire yes there. Just let me know that it is indeed working. Hope everybody's having a fantastic afternoon. Looking forward to going over our basic training webinar today. We're going to talk about how to use a position size or lot size calculator. I think this is very appropriate as we go into taking our COT report trades this week. Thought it'd be really a good topic to get into. Also want to give a shout out to those of you watching this in the recording. Want to say hello to you guys and welcome you to the program. If you are new to the program, feel free to let us know in the chat box where you're from. Let us know what state or what country you're from if you're watching this in the recording. Feel free to ask questions or let us know where you're from in the comment section down below. But let's go ahead and jump into this. As always, I need to remind you guys about the risks involved in this market. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade, in addition to how big your lot size is, and ultimately how that would affect your account if you were to lose money. So make sure that you're going through that process each and every time that you take a trade. All right, guys. So let's do this. Couple of things. And actually, let's do some housekeeping stuff just for those of you that are wondering about this. So obviously, we haven't taken our COT report trades yet this week. And that is due to the fact that the CFTC is going to be releasing the COT data. You can actually see this on the scanner. I think most of you are aware of this, but there is no COT data. We did not receive any COT data over the weekend. And so the COT data that we are waiting for will come out this afternoon. In fact, at the conclusion of this call, it will come out pretty soon after. In fact, about an hour and a half from right now, we're expecting to get COT data. So my plan, I've already scheduled out my afternoon. So my plan is to get that updated as soon as possible. The market probably won't move a lot right after we get the COT data. So, I wouldn't feel too anxious about it just because we're going to get it in the middle of the afternoon. So there's not like it's not like you're in the middle of a market session where there's going to be a lot of movement. So um, I wouldn't be too worried about that. Um, let's see. But what I would recommend, as soon as you guys get the signals, go ahead and take those trades so long as you don't take those trades during rollover. As a reminder, rollover is between 5 p.m. and 6 p.m. Eastern time. For me, I live in Mountain Time Zone. That's between 3 p.m. and 4 p.m. my time. So that is an off limits hour. Do not take any trades during that hour. We are going to receive some COT data just before that. So I would recommend that here, one second, guys. I'm actually chatting with FTMO right now, and they're there we go. They're barking at me over here. So I don't want that sound to go across to you guys anyway. So there we go. Okay, so we're good. We should be good. Anyway, so like I said, we'll be getting that out. I would probably, if you don't have the time to take the signals before rollover, I would just honestly, and this is probably just fine for everybody, I'll probably let everybody know in the Telegram as well. Update. No need to take the trades until after rollover. You'll be just fine. If you want to wait until Tokyo opens tonight, or just an hour or two into Sydney, I think you'll be fine today to get those in. All right. But let's let's see. Okay, so I hope that makes sense what we're doing there. Also, fun fact, I forgot to mention this. We added, you guys asked for this. We added those. Um, let's see. We added NAS 100, US 30, gold, silver, and oil has been added to um, the scanner. So right now there's not a lot of signals, especially, and it also doesn't really matter a ton because we're going to get new signals this afternoon from the COT data. The only notable things from last week was, a sell on gold, which is pretty much, I mean, that was a great trade. There's also technically a slight sell signal on oil. The two CFDs, NAS 100, US 30, those indexes are not really doing a lot right now as far as signals go. However, that will change or has the potential to change when we get new COT data. But that is added, so you can actually go in there and view those as well. So it's kind of fun to have some more things to trade outside of just the currency pairs. All right. Anyway, so let's go back to the presentation. So for those of you that logged in late, this is what we're talking about today. We are talking about how to use a lot size calculator. And again, I think this is an appropriate topic to discuss just because, we are taking a bunch of trades today, right? When you get those COT report trades, it's important to be able to know how to do this. So I thought this would be a good topic to go through. And a few people have asked me to do a specific webinar on how to use the lot size calculator. Okay. So we'll do that. Let me know. I did something to my screen. So if you guys can't see my screen, let me know. I'm assuming that you can see this right now. You should be able to see a page that says lot size calculator. And then it says Forex position size calculator just below that in a paragraph. So if that's what you see, then you're seeing well. If you can't, then we'll change that. But let's talk about this. So what is a position size calculator? And it's also known as a lot size calculator. It could go either way. Basically, I'll just read this here. It says a Forex position size calculator is a tool used by traders to determine the appropriate position size to take on a trade based on their risk tolerance, account balance, and other parameters. It helps traders calculate the number of lots or units they should trade to achieve a desired risk reward ratio and manage their risk effectively. The position size calculator takes into account factors such as the currency pair being traded, account currency, stop loss level, account balance, and percentage of risk per trade. By using this calculator, traders can ensure that they are not risking too much or too little, which is also a thing, on a trade, thereby helping them make informed decisions about their trading positions. Okay, so this is really important. For me, I feel like in our group, you guys know, I push this really, really hard. So it's kind of like, well, duh, of course we're going to use a position size calculator. But I'll be honest, guys, um, this is not a well-known like I'd say most people out in the Forex trading world don't use a position size calculator. So I feel like here it's obviously, of course, Steve's going to bark that for days, right? He's just going to say, yeah, of course, we're going to use a position size calculator because it's a must, right? But outside of our group, I feel like a lot of people just kind of take trades, with like a fixed lot size and they just kind of, whatever feels good type of thing. And I'm not saying that that trading style can't work, especially if you kind of have an idea of what you risk each day. Maybe that'll be okay. But I think long term, if you're trying to have really long-term success, I run a couple of copy traders as well. And so, when I'm managing this money, and I actually have a copy trader for myself as well that I manage multiple prop firm accounts with. And so when I manage money, I want to make dang sure that it is the same amount as far as a percentage goes for each trade. And that's where the position size calculator comes in so helpful. So this is how I'm able to manage, dozens of different trading accounts at one time, is because I feel comfortable knowing that when I take a trade, it's going to go across and that trade is going to get transmitted to each account with the right risk management per trade. And it's because of the lot size calculator. If I wasn't going through this process, I would be very nervous about, going forward. So, all right, guys. So let's show you what a position size calculator is and also some of the other benefits behind it. So one of the things I think is a big takeaway from that paragraph we just read is that it's not just about risking too much, it's also about risking too little. How many of you have ever taken a trade where you made some pretty good money and then you realize, dang, I could have made a lot more had I had a bigger lot size? Happens to everybody, right? We've all done that, perhaps even recently. Like we had a lot of really good trades last week. There's probably that feeling of like, oh, wow, if I'd only gone a little bit bigger, I could have made more. And there's always going to be that feeling on a winning trade, no matter even when you're using a lot size calculator. However, you're going to mitigate that that feeling by risking the appropriate amount each time, and that's through this. So, what are some lot size calculators you can use? So, the one that I've just been using, and I know there's one called, is it Trade Station? No, it's called Trade Assistant. Assistant. That one's kind of the common one that's on MT4. You do have to pay like $12, $50. I can't remember. It's between like $20 and $50, something like that. I can't remember. But it's a one-time fee, and if you like to trade on MT4, then Trade Assistant's a great one. There's also lot size calculators on TradingView. The one I use is just one on a browser. So if I just go lot size calculator, um, I use the one with my FX book. I've been using this one for at least over a year consistently. Um, and there's a few others you can use as well, but I really like this one. Um, and let's kind of go through the different fields here on a position size or slash lot size calculator. So you're going to have the different currency pairs you can trade. Every lot size calculator is going to have what they offer as far as currency pairs goes. My FX book has all the 28 major and secondary pairs, but then you also have the exotics in here, which obviously you're not going to use all of those. They do have gold in here. They do have silver, which is nice. They do not, however, have NAS 100 or US 30. So that is something to be aware of if you're going to use my FX book slot size calculator. But let me show you what this looks like. So this is going to make your trades absolutely precision like. Okay. We want to treat everything just like razor like. I've been doing a lot of things in my life this way, guys. Like it really helps. And I kind of take it maybe to an extreme a little bit, but I think it helps me level up in so many ways. Like I do things like when I make my bed in the morning, I try to make my bed 1% better every single day. Like I don't just make my bed, I make it 1% better every single day. Like I try to find a way, how can I get even more creases out? Like I'm that strict on it. And that's kind of how I am with the position size calculator is how can I get such precision every single time I take a trade. I don't just take trades to be like, oh, let's see how this does. None of that. We don't do that kind of thing. It's all about precision. Um, and I feel like that's why we've had a lot of really good results. Is because we have that kind of style, and we're very strict on what we do. So when we use the position size calculator, not every currency pair is created equal. So these position size calculators, they already calculate beforehand what the lot size is going. Well, how do I put it this way? So like, for example, the pips are not created equal on the pound yen as they are with the euro dollar. It takes more pips to make the same amount of money on, say, like the euro dollar. The euro pound has a really small average daily range. So if you make a pip on the euro pound, but you make a pip on, say, like the euro franc, which has or excuse me, not the euro franc. Let's do like the euro yen. Euro yen has a huge ADR. Euro, and then like the euro franc has a small one. Okay, or euro pound has a small one. So it's more impressive to make a pip on the euro pound or the euro franc. How do we know this? It's already on the scanner, guys. When you go to the scanner, there's this little on the very right side, you've got the daily pip range, right? And so you can actually filter this by the biggest ranges, and actually you'll see that gold, silver, and these other ones we've added actually have the biggest ranges. They're huge. Um, and it's because they calculate pips differently. It's just done in a different way, which is, again, another reason why you have to use a position size calculator. There's no way around it, in my opinion. But like, look at this. The euro pound has a 36, almost 37 pip average daily range. So if you make one pip, that's pretty impressive with the euro pound. Um, that's pretty impressive. But if you make, like I said, one pip on like the pound kiwi, which has a really high average daily range right here, it's not as impressive. So because of this concept and because currency pairs are not created equal is again another reason why you have to use a position size calculator, because if you end up risking too much on the euro pound, it could be devastating. If you have a big stop loss on the pound kiwi, well, it's like, well, that's normal because you have to have a big stop loss on the pound kiwi because the ADR is just so big. Okay, so that's why you have to filter the currency, because it's a necessary field. You can't just put in whatever currency pair you want. You have to put in the one that you are indeed trading. So let's do an example. Just leave it at the euro dollar. I trade in US currency. So if you trade in a different currency, you can change this, but it just defaults to US. You put in your account size. I'm going to put in, let's just say $50,000. And then you put in your risk ratio. Now you can change this to be a dollar amount which is cool, or you can change it to a risk amount, like as a percentage. I do it as a percentage because that's how I do everything in my trading. I'm willing to allocate a percentage of my account to every single trade. And as you guys know, with the COT trades, I've been doing a quarter of 1% of my account, which basically means it's like 1/400th of my account. It's a quarter of a single percent. So if a percent of $50,000 is 500 bucks, then a quarter of that's going to be like what, 125? Yeah, so $125 is what I'm risking. I already know that just because I did the math in my head, but this will do it for you, which is kind of nice. Okay, so now you got to put in your risk ratio. So let's put in 0.25. I've had people just do 0.25, and it notice how it forgets it. It actually doesn't put in the point. So be very, very careful. If you don't put in 0.25, it's actually 25%, and that's a huge trade. So 0.25 is what I've been putting in for my trades when I trade the COT report. If it's a weekly trade, I might take a little bit bigger. I might do a 0.5%, or if I'm really feeling it, I might go a full percent on a single trade. But I usually don't go over a full percent, especially on prop firm accounts. You need to be able to have you don't want to lose too much money on a prop firm challenge. And so 0.25 is kind of that sweet spot, especially when you're taking 12 trades. Now, some of you don't like to trade commercial shift, or you don't want to trade leverage funds when we trade the COT report. If you just subscribe to one or the other, I think you could probably do a 0.5% risk per trade. Like if you only trade shift, then do a 0.5% risk. If you trade only leveraged funds, then do a 0.5%. But if you're going to do all 12, then I would probably do a quarter. So 0.25. So anyway, I'm going to do that example because that's what most people do. Then for your stop loss, let's put in, let's just say for the euro dollar, like if we were trading the euro dollar, an appropriate stop loss for the week would be something like, let's go back to the scanner. Let's find the euro dollar here. It's right here. About 68, 69 pips is an average daily range for the euro dollar. That's a good week-long stop loss. Gives it plenty of room to do what it needs to do to get in the right direction. But if it goes in the wrong direction, we stop out before it gets too bad. So I like the average daily range model, which is what we've been doing for our stop losses. So I'll put, 69 pips in there. So let's go back to the position size calculator, put in 69, then click calculate. And then here it is. So what this is basically saying, as soon as you click calculate, it takes all of these fields together, compiles it into information that's very useful. So what this is basically saying is, in order to risk $125 this week on this trade, you can, if your platform does it in units, you would need 18,116 units. That's precision, guys. That's exactly true. That's not just like, oh, maybe about that. That's exactly true. Okay, 18,116 units. If you're on MT4, which doesn't use units and it uses lot sizing, then you would use a 0.18 contract. What that's saying is, if you lost 69 pips on the euro dollar with a 0.18 contract, that would be exactly $125 loss. So when you go through my accounts, my prop firm accounts, if you look at my order history, all my losses that hit stop losses are exactly the same. Like they're off by just a couple of dollars sometimes, or just off by a couple of cents, because I keep it precision, right? Because I want to make sure that we know exactly what we're getting into each week. So when I take a new batch of trades, I know at least on a prop firm account, I'm risking 3% of my account. That's what I'm willing to risk. Now, if that's too much money, then you got to change that up. And that means you got to go less. If you're thinking, hey, Steve, that's nothing, 3% is nothing, then you can level that up. But again, I would do it with experience over time. If you're feeling really confident and you can handle some losing streaks, then maybe level that up. If that's something you want to do. And you can certainly do that. I'm not going to stop you. All I want to make sure is that you know how to manage the risk and that you know and have the tools available so that when you decide to risk, the 0.25%, a 0.5%, or if you want to go risky-roo on this and go 1% per trade, you know exactly how to do it. Okay. So and so what you would do next is you would take this information if you were trading the euro dollar, and you would hop into your trading account on either TradingView, or you would hop in on like MT4, and then you would go out and execute a trade, a position with a 0.18 contract in the direction of the signal, and then you would just ensure that your stop loss is 69 pips, and then you'll be golden. That's how you do this. This isn't the only lot size calculator out there. There's actually several different lot size calculators you can use. Another one that I like, especially if you're trading like NAS 100 or US 30, is this one right here. This is cashbackforex.com. This is another one of those internet lot size calculators. Let me put this link in the chat box for those of you that want it. So, like I said, you can't do NAS 100 or US 30 on my FX book. They don't have that built into their calculator, but these guys do. So what you could do is you could type in, let's search like US 30 right here, and then you'd put in your open price. So with this one, it's not like pips. They don't work that way. You'd actually have to put in, you have to know before you actually come in here, you have to know your open price. So you have to know the current price you're going to get in at. Let's actually leave it at whatever it was. And you have to know where your stop loss is going to be. And then you put in your account balance, and then you put in your risk per trade. So like I said, I usually do 0.25, and then you click calculate. Now, let's see, why isn't this giving me a lot size? To click enter contract size. Let's see, is that going to give me, there it is. Okay. Perfect. So let's actually do a live example. Let's actually go to US 30 on a chart. So let me show you how you would do this if you were trading US 30. Okay. So we pull up US 30. Let's say you wanted to buy, again, I'm not making any analysis here. This is just to show you instruction on how to trade, like how to use the lot size calculator. That's all I'm doing. Okay, so this is the current price of the market. This is where it is. No concern there. And let's say you wanted to put your stop loss, like, I don't know, right here. Okay, something like that. So let's mark up those two lines. So those are our two places right there. Actually, I don't know. I don't need those two lines. There we go. Let's just do this right here. Okay, so this is about, how many pips is this? This is like 200 or 2,158 pips, which is a lot on if it were a currency pair, but this is a different type of thing, right? It's a different animal altogether. So if you're not familiar with trading CFDs or index funds, I wouldn't go in there and do that unless you get some practice first. But again, if you wanted to do this, I'm just showing you the example. So this is our entry. We're going to say we're going to enter at 34,331. So I would just go back to the lot size calculator. I'm going to put my open price at 34,331. And then I'm going to put in my stop loss. Let's go back here. Where's the stop loss? Well, our mock stop loss is 34,100. Okay, that's just what we chose. Okay, just for the example. Let's say that makes sense for the type of trade that we're taking, or the strategy we're using. So 34,100. So now we go over here, put in 34,100. And let's say that this is a $50,000 account again, and we want to risk 0.25% per trade, 0.25. Now we click calculate. And this is what we need. We need a 0.54 contract, assuming that price is our stop loss and we're going long. Okay, I hope that makes sense. Oh, and this is kind of helpful. This kind of tells you a standard contract is 1.0. That's also is 100,000 units. A mini contract is 0.10. And that's 10,000 units. A micro is 0.01, and that's 1,000 units. A nano, which we don't trade with nanos, but a nano is 0.001 and it's 100 units. As a general rule, it's not completely true, but as a general rule, every pip you make, at least in Forex, at a micro contract is about 10 cents per pip. If you make a pip with a mini contract, you make about $1. On a standard contract and you make a pip, that's about $10. Okay. That's just a general understanding, and that's with Forex pairs. So it's not exactly the same thing with US 30 NAS 100, but especially with US 30 or NAS 100, you will get beat up if you're not using a lot size calculator, because the pips are different. It's a totally different animal. So you've got to use this if you're going to trade those. And now that we've introduced that, that's probably going to be something we start doing more analysis on, start taking more trades with those indexes, and gold, silver, oil is going to be a thing too. Got to use this. Okay. But all of this pre-fills, you just have to put in the instrument. You have to type that in. You have to put in your price, your stop loss. You have to put in your count balance and the risk per trade. And then it's just simple. Like, okay, that's going to be our lot size. So it's not too complicated. I just want to make sure everybody gets this, because this is where people blow up accounts, is if they don't get this right. Okay. You can really get yourself into a heap of trouble here. But a lot of people just trade without it, and they get themselves in a heap of trouble even without this. So you can still get yourself in a heap of trouble with it, but you're just stacking the odds in your favor if you use a calculator. Okay. So this is a good one. Definitely bookmark that if you haven't done so already. This is one I would bookmark, especially if you're going to start trading some of those other instruments. And you can search here. Let's actually search if there's other things like, I mean, you can still use this one for everything. Like if you wanted to use the euro dollar, you could do euro dollar. This one doesn't let you do pips. You still have to put in the price as to which you're going to get in at and your stop loss. So that's a little bit annoying, but not as easy as like my FX book, but it can be done here. Absolutely. I think I have another place. Let's see. No, that's just the one I wanted to share. I also want to give you guys this. Let me put this in the chat box for those that want it right there. This is for my FX book. There it is. Now, if you go to TradingView, there's actually some tools here you can use. Let's show you how to use the ones over here. So let's switch to a currency pair like the euro yen. And let's turn off that weekend indicator. If you go to indicators up here in TradingView and search position size calculator, I don't even know. I've never used any of these, by the way. I'm just going to click on the one that seems to be used the most. This one with ZZ Crypto has 3,500 users. So let's click on that one because a lot of people seem to like it. And I think with this one, it's the type of thing where you have to drag and drop your, like if you're going to buy here, let's see. Okay, why is that not showing up actually? I'm going to delete that one. I think I've used the Sonar Lab one actually. Let's do this. Position size calculator by Sonar Lab. Let's use this one. I think I've used this one before. Yeah, oh, yep, this one. Yep, you just type where you want to buy. So let's say we buy here and we want to put a stop loss. We'll say like I don't know, right here. Okay. Oh, and then you have to set a take profit. So let's just say take profit up here. Okay. And then you can adjust these if you want, but this is just saying this is where you're going to enter. This is your stop loss. Here's your target. Click apply. And then I've used this guy before. So I'm trying to figure out how to, there's other things you can do. Um, I haven't used this in a little bit because I used the other one. I'm just trying to show you guys how to use this. Let's go to settings. Oh yeah, here you go. You have to do it in the settings here. So you have to go back into the settings and then you put in your risk per trade. So let's do 0.25. Contracts are in 100,000 units. That's all it's saying. It's just 1.0 contract is 100,000 units. So just leave that at the default. Here's your entry price, stop loss, target. You can actually have multiple targets, which is kind of cool. Let me change this to black because I can't see anything. Let's click OK. There we go. Perfect. So now you can see down here your risk. Um, oh, and I haven't. Let me actually go back to the settings. Oh, I got to put my account balance. So let's say this is a $50,000 account. Click OK. So this is saying that we need what this is basically saying is if you want to use this one, is your balance is $50,000. You're risking 0.25% per trade, which is, and it'll tell you money at risk is $125. Your lots is 0.17, almost 0.18. You could probably just round it to 0.18 if you wanted to. Your RR ratio is 1 to 3.08. Yeah, that's what that's saying right there. So it's also just in recap, just saying if you use this stop loss, you should use this lot size in order to risk $125 per trade. That's also what that's saying. And then your target is, up there. So you can use this one. I think this one's a little hard to use, to be honest, but if you wanted to use one directly on TradingView, there's another option. And you can also just search in the indicators here and just search, lot size calculator. And there's tons of others you can use. I mean, there's endless amounts you can. Here's another one. Let's try this one. I've never used this one before. Oh, I need to remove some stuff. Let's go and remove that guy. And let's go ahead and add a lot size calculator. Sure, let's try this one. Oh, it's the same thing as I was just using. Oh, interesting. Okay, so this one, you can kind of, I guess you can interact with this one. Never used this one before, but oh, maybe you have to click. Can you change it up here? Oh, you have to click into it. Okay, so risk per trade is 0.25. Entry price, okay. Honestly, I don't like this one, but there's another option. I can see why not a lot of people are using it. But yeah, like I said, the one I use pretty much exclusively is this one for Forex pairs, my FX book. And then I like to use this one with cashback Forex if I'm trying to do um, like a CFD or gold silver. And then I think the king out there is probably it's called Trade Assistant on MT4. You do have to pay for that one, and you have to download it onto your computer, but Trade Assistant's really nice if you want to use that one. And let me know if you guys, all those of you here, either watching this in the recording or live, if you have a position size calculator that you like to use, let us know which one you like. Like I said, I just use this one. But this is the process that you'll go through today. So when you get the signals today, what will this look like? Let me pull this up here. So today, and by the way, for those of you that missed it, we added these 5 different instruments to the scanner. You probably saw that, but those are going to be available to trade right away, especially when we get new COT signals. That'll be fun to take a look at. But when you get the new signals, it'll look like this afternoon. You'll get a post that look just like, oh, I went too far. Oh, this is the wrong place. It's right here. The post will look like this. Right here. Yeah, this is what it looks like. So you have 2 images with the different signals. You're going to get your leverage funds trades. This is just the different data that we get from the COT report. And you'll have a stop loss for each one in pips, which is why I think it's easier to use this one, because you just plug in the amount of pips right here. So let me actually do an example from last week. So if you wanted to take, for example, the pound CAD, it has 100 pips stop loss for the week. So what you would do is you would just go over here to the pound CAD, search it in the drop down, click it, make sure your account size is what it is. I do a 0.25% risk. Then you put in 100 pips stop loss. Then you click calculate. And that's going to tell you, okay, if you want to risk $125 per trade, which is the same thing as a 0.25% risk of your account, then you need to use a 0.17 contract to accomplish that. And again, it's assuming all these variables, but that's how you get precision on every single trade. Because I get people all the time who tell me, isn't trading pretty risky? I'm like, well, yeah, if you don't use a lot size calculator. Well, yeah, well, couple things. If you don't have an edge, we have our edge. It's the, COT report and the scanner and using sentiment indexes and the other things we do. That's our edge. And then we further that edge by protecting ourselves by using a lot size calculator and a stop loss on every single trade. And to me, trading is one of the least risky things that I do. This is a personal opinion. This is not financial advice. As a personal opinion, it's one of the safest things that I've ever done because as far as and also being able to create income because of these things that we've put in place. See, and a lot of people, your average Joe is not going to do this. This is why the average Joe doesn't pass prop firm challenges. This is why the average Joe curses trading and says that trading's a scam. They don't do this process. They're not strict like we are, right? And that's the thing. You can still lose money doing this. This is just to help protect you, right? I don't want any of you to lose. I've called people. I've had the horror stories where, I call somebody and they're like, "Oh yeah, my story is I tried trading, 5 years ago and I lost $50,000." Or, I was on the phone with the guy just a month ago, maybe 2 months ago, and this guy had lost $175,000 trading. Just insane, just insane. And it's like, how did it, get to that point? And so I want to make sure that you guys are protected. That and it's not just to protect. And like this kind of goes back to what we said at the beginning of the presentation. It's not just about protection. It's also making sure that you get the most out of each trade possible, right? Want to make sure that you guys are not just protecting yourself, but being as lucrative as possible within the bounds that you're setting, right? Okay, so Wes says I use the risk calculator app. Awesome. Jim says I still like using a trailing stop at 33 at a third of the stop loss. Good. That's also another way to protect gains and capital. That's fantastic. All right, guys. So I don't have much else to talk about unless you guys have other questions, but we are going to be getting COT data in T minus 42 minutes. Okay, so when that comes out, I'm going to be all focused on updating the scanner and getting those signals out. Couple of things for those of you that logged in late. The signals are going to be sent out within an hour, hopefully within an hour of us getting the COT data. So within the next hour and a half to 2 hours, you will get new scanner signals and you will get new signals on the Telegram chat. Now, don't feel rushed to jump into these trades just because it's Monday afternoon, okay? Especially if it means you're going to take those trades in the middle of rollover, okay? When is rollover? Rollover occurs between 5 p.m. and 6 p.m. Eastern. That is between 4 and 5 Central, 3 and 4 Mountain, and between 2 and 3 Pacific. So hopefully I got everybody on that, or most of you. I know some of you maybe aren't in the United States, but that's when it happens. I do not want you taking trades during rollover. That's not a good time. So you should plan on taking your trades if you can before, but if don't feel rushed to do that. I may not even do that, but you can take your trades, sometime after rollover would be fine. We do have a live trading webinar tonight. We'll probably dive more into the scanner. We'll look for signals. We'll recap the signals that we posted tonight. That will be at 8 p.m. Eastern, live trading webinar. So, all right, guys, we'll have a fantastic rest of your day. Thank you for coming, and we'll see you guys in the live trading call.